Prakash. Let's get in a check as to how the markets are panning out. And on account of the weak global cues, the weakness in the equity markets continues. 58.50 continues to play up as a strong resistance, and it's between the green and the red. As we speak, it's 58.45. 19,314. The market breadth is just about even, Stephen, but marginally in favor of the losing side. The Bank Nifty futures also coming off from the high point of the day, and you do have quite a few consumer durables as well as FMCG stocks along with select banking names in the limelight on the downside. Jayaprakash Associates tops the charts off by 2.5%. HDFC reeling under pressure, so now it's 796. Tata Motors, Maruti Suzuki, Hero Motocorp from autos are looking weak. You've got ITC as well as Dr. Reddy's from the defensive pack which aren't holding up. Select banking names like a Bank of Baroda as well as an SBI in the limelight on the downside, and some of the gaining counters. Then you do have the IT as well as technology stocks which are showing you a little bit of respite. So Wipro, Sun Pharma, Infosys as well as an ICICI Bank, Asian Paints and DLF are some of the counters gaining traction. For the broader markets, it's rather listless but marginally in the green terrain.
All right, let's also take a quick look at how the fixed income and the currency markets are faring. And in the fixed income markets, it is you are continuing to see fairly quiet trades. Okay, that's the rupee on your screen. That's trading at 54.42. So it is actually up marginally. It's gained something like 5 paise from yesterday's closing levels. There is one of the factors that will actually work positively for the rupee is the fact that you've seen oil prices come off very sharply over the last couple of days. Ever since you had the US Fed minutes put out, where the minutes seem to suggest that QE3 could end much sooner than the markets are expecting. So that's taken the sheen of commodities. Crude oil prices have come off, and that's helping the rupee to some extent. Also, the fact that you're seeing some sort of stability in some sense coming back into the equity markets, at least for the near term, that's also helping the rupee hold up. In the fixed income markets, it continues to be a fairly quiet session of trades. So again, we pointed you to Monday's event where the government announced that it would borrow 12,000 crore rupees less in its current year's borrowing plan, which worked as a short-term positive on yields, but you're seeing yields climb back to levels of 7.81, 7.82%. It's quite likely that it will hold these levels until a budget day, when you are expecting the finance minister to say something which the fixed income markets will take as a cue for either to drive yields up or to drive them down. But until then, it's fair to expect that you will see fairly quiet sessions in the fixed income markets.